Hello everyone, I'm Candice and today I'll be covering what to expect for 2026 in the HDB and private markets and how you'll need to posture yourself if you're looking to do a property move this year. To give you a preview of what's been happening since COVID, let's go through the number of HDB transactions since 2020. In 2020, we had 24,748 transactions, the year we had 2 months of circuit breaker. 2021, there were 31,017 transactions, the start of the HDB boom. In 2022, there were 27,896 transactions. In 2023, 26,735 transactions. 2024, 28,986 transactions. 2025, HDB released the confirmed data of 20,913 for the first 3 quarters, and the last quarter would likely push us into the 26,000 range. If you've been following the market, you know that October 2025 saw a massive 38% drop in HDB resale transactions. Why? Well, it could be because of the delayed Hungry Ghost Festival. But the more likely reason was because we are seeing a systematic shock to the supply. The government announced in August last year that it will be pumping out approximately 55,000 BTO units between 2025 and 2027, and just earlier this year, they even stated that they want to push beyond 55,000 units now. In 2025 alone, over 19,000 BTO units hit the market and over 5,500 sales of balance units were up for grab. Buyers were being diverted away from the resale market and back to the BTO market. They have since decided to stay on the fence before committing to their purchase, affecting resale transactions and prices. But referencing the government's 55,000 number, this also means that there are at least another additional 35,000 BTO coming out this year and next, averaging at least 17,500 more units each year. And if you thought that supply was an issue, here is another big number, 13,480. That is the number of flats hitting MOP in 2026, double the 6,900 we saw in 2025. This wave is concentrated in Punggol, Queenstown, Tampines, and Toa Payoh. It is also evident that resale transaction prices are slowing. In the URA Q4 Flash Report, it states that 4th quarter 2025 resale prices index is at 203.6, largely unchanged from 3rd quarter 2025 index of 203.7. This is the first time resale prices have remained unchanged since 1st quarter 2020 COVID period. To give you an overview, let's run through the numbers. 2020, 5%, mostly driven by year-end post-lockdown sales. 2021, 12.7%, where we saw the biggest HDB boom in recent years. And to understand how big this actually is, it means each quarter yielded at least 3% growth. 2022, 10.4%. 2023, 4.9%, largely due to new cooling measures and condo downgraders getting a 15-month wait-out period. 2024, 9.7%. 2025, 2.9%. 2.9% for an entire year is crazy because it's lower than some of the quarterly growths from the previous years. This goes to show how many people are now sitting on the fence because of the government's BTO announcement in August 2025. With prices stagnating and transactions falling 10% from the previous years, tons of flats attaining MOP, and a huge influx of BTO supply, it sounds like HDB markets are finally showing tangible signs of slowing down. HDB and the government have done it. They've achieved a sustainable growth rate for public housing. So after all these numbers, what's next? Because the resale market is cooling. This could be the year the government finally removes the 15-month wait-out period for private downgraders. This move would bring cash-rich buyers back into the HDB market and potentially fill in the gaps left behind by all these new supplies. There is also the possibility of HDB increasing income ceiling and eligibility for first-time buyers this year. Why? Apart from it being an election topic last year, it is because the last income ceiling adjustment was all the way back in 2019, and based on historical data, it seems like this happens every 4 to 5 years, and we're now overdue for it. In August 2011, income ceiling increased to 10,000. In August 2015, income ceiling increased to 12,000. And September 2019, income ceiling increased to 14,000. So for sellers, listen up. Your competition just increased multiple fold. We are heading into 2026 with twice the inventory of unsold resale units compared to last year, and also the new BTO and MOP supply. We are no longer in COVID level pricing and demand era. HDB resale prices were dead flat in Q4 2025 for the first time in 6 years. Buyers are now BTO SPF triers. They will only come back to the resale market if they fail their balance. If you overprice now, you are not testing the market. You're just helping your neighbors sell their unit by making it look like a bargain. Additionally, if you're selling an older flat, 20 to 30 years or older, your competition is even stiffer. You will be competing with an estimated 17,500 BTO units and 13,480 MOP units. Almost 30,000 newer flats combined. So be realistic about your pricing if you're looking to sell and cash out on your property this year. For landlords, expect some form of market stabilization. With 13,480 MOP units, a portion of them may be going up for rental, adding into the supply of rental units. Likewise, for private properties, let's take a look at what's been happening since COVID. Let's go through the number of private transactions, excluding landlord, since 2020. 2020, there were 18,295 transactions, of which 54.5% were 9,982 new launches. 2021, 29,432 transactions, of which 42.6% were 12,526 new launches. 2022, 19,628 transactions, of which 34.6% were 6,790 new launches. 2023, 17,731 transactions, of which 35.2% were 6,241 new launches. In between both of these years were flurry of cooling measures and also an all-time high interest rate environment. 2024, 19,887 transactions, of which 31.4% were 6,239 new launches. 2025, 23,884 transactions, of which 44.6% were 10,656 new launches. For the landed market, in 2020, there were 2,120, 2021, 3,082, and 2022 to 2025, we saw between 1,200 to 1,800 transactions. It would seem, based on these numbers, that it might be a growing trend for people to be more inclined to non-landed homes. This could be a shift to mentality of people wanting to have hassle-free maintenance, or even having a home where the kids can enjoy facilities, or maybe even using these non-landed homes as a stepping stone to the final landed dream. The overall private residential price index rose at a slower pace of 0.7% in fourth quarter 2025. And for the whole of 2025, the overall increase in the price index moderated to 3.4%, marking the smallest increase in a year since 2020. This is the overall price growth since 2020. 2020, 2.2% increase during circuit breaker year. 2021, 10.6% increase. TDSR lowered, borrowing tightened, first of many cooling measures the government started to implement. 2022, 8.4%. Bank interest floor rate increased near the end of the year, meaning borrowing tightened again. 2023, 6.8%. ABSD increased across the board. 2024, 3.9%. 2025, 3.4%. We can see the ripple effect of property prices after the cooling measures, and it seems like the government's objective of creating a sustainable private property market has come to fruition. There will also be fewer new launch units in 2026, approximately over 9,000 units versus over 12,000 in 2025. While new launches are fewer, don't be fooled. There are still about 15,640 unsold private units in the pipeline. However, OCR stock is nearly cleared out, meaning competition for any new launch in areas like Tengah, Tampines, or Hougang will be much higher than last year. All in all, if you're looking to sell your private property, the good news is the wave of MOP units might perhaps strengthen demand for private properties. But that is also still hinging on the fact that first-time buyers steer away from waiting for their BTO chances and buy the MOP units, then allowing the sellers to buy your private property. This is a year to price reasonably. A year-on-year growth of 3.4% signals a slowing market and a drop in demand compared to the higher price growth in preceding years. And for certain areas, your resale prices may be close to the new launch prices. In today's market, don't be surprised if you see resale properties priced nearly as high as new launches in the same area. The key differentiator here isn't just the price tag, it's the space. For a 2 million budget, you might be choosing between a 1,200 square feet resale unit versus a more compact 990 square feet new launch. While the total cost is the same, you are effectively paying for the newness and modern efficiency of the 990 square feet unit or the sheer size and potential of the 1,200 square feet resale home. So, buyers may be swayed to choose the newer option for the facilities and vibe. Nothing wrong with pricing the resale unit at the price you want, whether it's the bank valuation or maybe you feel like it's rightfully valued that way. This segment is just to offer you a slice of what the other side is pitching against your property, or if you're wondering why people are not giving your offer price. For the owners of smaller sized private properties like a 1 to 2 bedroom, you might indirectly be also competing with BTO launch should they increase the eligibility for first-time buyers, reduce single buying age to 30, or increasing income ceiling to 16,000. If you look in your area, some people may give up the idea of buying a 1 to 2 bedroom condo and going for a resale HDB option since there is a current gap supply in the market. Moving forward with the other economical factors, the interest rate flip. HDB loans are stuck at 2.6%, but bank rates have softened to as low as 1.5% in recent months, thanks to the US Fed cutting rates and signaling towards more rate cuts. With President Trump having 3 years more on his term and the current Fed chairman ending his term in May 2026, he will likely to be replaced by a nominee from the president himself. The signal is clear. Lower rates are coming for at least the next 3 years until President Trump steps down. If you are still on a 2.6% HDB loan and would like to reduce your mortgage further by a few hundred each month, now's the time to start considering this move, especially if you're looking to upgrade to another property in the near future. On the other hand, in terms of macro property factors, lower interest rate usually stimulates buying demand. Why? Let me show you the interest to principal breakdown with these numbers. A $1 million loan at 2.5 interest rate, 30 years loan tenure, your mortgage will be $3,951, $1,911 to principal, and $2,040 to interest. With the same example but lower interest rate to 1.5%, your mortgage would be $3,451, $2,232 to principal, and $1,220 to interest. You can see the double whammy effect where your overall payment drops and your principal payment increases. This is one of the reasons why COVID had such a property boom. Interest rates were below 1% and that triggered a huge wave of property buyers. This is why falling interest rates would likely mean more people would be considering making their property purchases this year. And of course, the best news of all, despite the global uncertainty, the Singapore economy pulled off a shocker. 4.8% GDP growth in 2025, beating all forecasts. We are growing faster than expected, driven by the AI and manufacturing boom. While our PM Lawrence Wong said maintaining this growth is challenging and cautioned for more sustainable growth, it is still a positive indicator that the economy did well in 2025. Hence, another nod towards potential increment of property and investment demands. Of course, we'll have to assess the median household income, mortgage to asset ratio, and unemployment rates, which we will get access to next month during Budget 2026. So in short, I think it's a good year to be a buyer because of the many options you have out there currently. It is a good interest rate environment to be buying your property as well. For sellers, price reasonably and focus on your USP, unique selling point, as you will be competing with more units than before. Want a full breakdown of the numbers I presented? Drop me a text at 96949000 and I'll send you the consolidated data as an easy to reference document. I'm Kenneth and I'll see you in the next video.